Okay, welcome to another episode of Real Talk with the Real Property Nurse. Today we have Jose Perez from Country Mortgage. Getting tongue tied.
Mhm.
Hey, Jose, how are you?
All right, how you doing, Nikisha?
Good, great. Thank you for coming on. So tell us a little bit about yourself. How you got started in the mortgage business?
So pretty much, I got started. I was always in real estate, whether it was just mainly just investing, buying properties, flipping them, buying and holding and renting them out. And then I also had a love for numbers. I pretty much wanted to be an accountant after high school. So kind of had this bright idea because I love real estate and I love numbers. It's just pretty much put the two together, and that's how I became a licensed mortgage lender. Because I
Okay.
like to deal with people. I love real estate, love playing with numbers, and it was something that was just right up my alley. I started off by helping some of my investor friends by doing DSCR loans.
Mm-hmm.
And I decided to I was brokering those deals, like just putting certain lenders together with investors, and then. Like I said, I was like, well, this is something I like doing, so I just went and got my license.
That's awesome. Awesome. So, how long have you been doing this?
At this point, about 5 years now.
Okay. I know it feels like forever, right?
Yeah. You learn
Got
a
so
lot in
much
a short period of
background.
time,
Yeah,
especially
but
with what we've been dealing with in the last.
yeah, 5 years. Yeah,
Yeah,
like
yeah,
COVID. Yeah,
right, exactly. Yeah,
you came in right at the that's like snowball effect,
yeah, absolutely.
just everything happening. Um, yeah. So I interviewed lenders and just people in the real estate industry, just trying to spread awareness and let people know that you guys are accessible. Because like I always say, when I was going through the home buying process, some years back, I never really had a discussion with my lender. Like, I mean, they would ask me for like documents or things of that nature, or to write a letter to explain this purchase, or stuff like that. But I never really had a relationship. And I think it's so important that people start to cultivate these relationships with you all, because it's so important. Like, you guys are like the key part
Hmm.
to the transaction. So, without you financing it is not happening. So
Right.
I think it's very important. So with that being said, what is some advice that you would give like first time buyers?
Advice that I will give them is don't tell yourself no before you talk to a professional. Um, I always say, let's see how you look. Apply. Even if I have to just do a soft pull, I'm willing to do that. See where your credit is, submit the documentation, then let's see how you look right now. Because the worst case scenario is you might just not be ready right now, but at least we could create a roadmap for you and
Absolutely.
get you to that point where you can buy a home, right? If not, you just sitting there on the internet listening to people that might have bought a house 10 years ago,
Hmm.
um, advice that may not be relevant in today's economy market, and you're going off of that, and you don't really have a concrete game plan on your end goal of to buying a home. So
Right.
I always recommend taking that time to speak to a professional.
Okay. And what is your how can I say this? How do you feel about pre-qualifications versus pre-approvals?
Hmm.
Since we're talking about them getting,
Pre-qualifications, I don't even. Yeah, nah, I mean pre-qualifications is just like I don't in today's time I don't even know if they're even worth it. I focus on pre-approvals. Pre-quals, most builders
Mhm.
I don't even on the listing side I don't even really even consider that a reputable offer. So I mean
No, we
pre-approval is
don't.
what people want. Yeah.
Yeah. Can you just,
Because
elaborate a little
the
bit on
difference.
what the
I'm
Yeah.
sorry. So the difference is one is just going off what's on the application, and the other
Mhm.
one is the lender actually validating that they review documents and everything like that. Because you'll be surprised even in today's time where some people really don't know how much money they make. I've had a lot of situations where You got people who put they make $25 an hour on their application and didn't realize until I pointed out to them that they got a raise last year. You know what I mean? You'll be surprised how many times that happens. So it's
Wow,
like you
really?
can't just take. Yeah, you can't. Yeah, you can't. I'm serious. You'll be surprised how many times they have it. You ask somebody how much money they make an hour, they tell you one number, and you get their paycheck is a whole different number. And so it's like
Mm,
reviewing documents is so crucial, and
yeah,
that could go the opposite way, right?
yeah,
You know. What I mean, they've been you know rounding up, telling people they make $25 an hour, but they really make 24.30. You know what I mean?
right.
70 cents that makes a difference. You know what I mean?
Yeah.
In some cases.
Yes, every dollar and cent it makes a difference.
Yeah.
What so like, a lot of people right now are so interest rate conscious, right? What would you tell a buyer that's, waiting for rates to change or waiting for the rates to drop?
I always tell them I'll focus on the payment. Focus on the payment, and is is this of the house that you want, right? If the answer is yes to both of those questions, the rate, you know, I'm not gonna say it doesn't matter, but get the house because you could try to time the market,
Yeah.
but that's not the best strategy because it's more so about time in the market, right? Like you could
Mhm.
try to time the market and wait, the interest rates come down, but now these the houses cost more, right? Or that's why I say if you like this house and you can do the payment, why not get it now? Because at the end of the day, if rates do continue to come down, you in the house that you love, right?
Mhm.
You could refinance, get your payment lowered, and still get the benefit of the rates coming down versus sit on the sideline waiting.
Yeah.
During that time, you building up equity, right? Um, you wait, you just going to be with a group of other people that waited, and now you end up bidding wars and all that type of stuff. So it's just my thing is the payment and is do you love this house, right? I would never recommend someone settling, right? Um,
Mhm.
but at the same time, you know, do you love this house and can you do the payment? That's what I would always recommend.
Yes. Yeah, no, absolutely. That's one of my things. Can you afford this right now? If you can't, then that's different. But we're not going
Hmm.
to chase a rate. You know,
Right,
it's too unpredictable. You can't.
right,
I don't care what happened last year. Is just is a whole new year, whole new scenario, different market. And
right.
chasing a rate is just ridiculous.
Yeah,
And I always say like it's just it's just so funny to me how people will chase a rate for their house, but not for their car, not for their credit cards or anything like that.
yeah,
I know so many people with a Macy's credit card, and I guarantee you the interest rate
right,
is about 18, 20, 19, 20%,
right,
and
right,
nobody
right,
thinks about that. They're not interest rate conscious then. But for an
right.
asset, is like now I'm going to be so conscious of the
Yeah,
interest rate. So I just
absolutely.
try to get more education behind that, understanding that yes, the rate may be a little bit high right now, but if you can afford it, then do it, and you can always refinance it later. But
Absolutely.
yeah, it's just, so when with the people that you most of the first time home buyers that you are dealing with, is credit what about their credit is that you would give advice about? Like, is it more so that they're paying late that you see that people are having credit issues, or is it just utilization, history? What do you see most of?
I see a lot of late. Yeah, it's a mixture of both. Actually, is the actually no. I would if I had to rank, I would say is utilization, then the lates. Um,
Okay.
yeah, and then after that, I would say probably just not being up on their student loans. You know what I mean? Because a lot of people student loans got deferred. During COVID and
Mhm.
all that, and then over the last year or so, people's loans have been coming out deferment, and they might be getting mail right to address it. And some people, they might not pay attention to their mail. Going to work, come home, dealing with kids. your bill, you might be paying your normal bill this whole time. You getting mail from student loans saying that your loans coming from deferment. You don't do
Yeah.
nothing about it, and the next thing you know, it's hitting your credit that you
Mhm.
that you late because it's been out of deferment and they've been requesting you to make a payment, and
Right.
you know what you were unaware. So I
Mhm.
understand. I would say that would probably the third issue is people
Yeah.
coming out of
So,
deferment and people just not dealing with that.
mm, yeah. And how, can you talk about how much impact student loans have on, the home buyer?
So if they are in deferment, we got to take a 0.5% and mainly add that to your debt to income ratio.
Okay.
Um, but if they're in deferment or they're paid on time, it's really actually from what I've seen is more of a benefit than anything because you got a lot of people that have student loans are relatively in the early years of their financial journey, I would say, right? So
Mhm.
that's credit history that
Right.
a younger person wouldn't normally have, right? So whether it's in deferment or you paying on time, that's decent credit history. Long as it's not the burden isn't too much to throw off your debt to income ratio.
Mhm. Right. And what about bankruptcies and, like applying for a mortgage after a bankruptcy? Like, what could you give us a little timeline or like advice on what a person should do to proceed after that?
Well, after a bankruptcy, your main thing should really be just reestablishing your credit, right?
Mhm.
Learning from um, what you've been through.
Mhm.
If you do get new credit, because when you go through bankruptcy, they give you a lot of counseling and things of that nature. If you follow the things that they teach you, as far as how to use your credit, as far as utilization, keeping, when you do get new credit cards, keeping them between 10%, 30% at the most, things of that nature to reestablish your credit, paying on time,
Mhm.
you should be fine within the 2 year waiting period that is typically is that you have to wait between bankruptcy and purchasing getting a mortgage on the home. So I mean
Right.
that's a decent amount of time to reestablish your credit, and after that you really should be fine. It's not the end of the world.
Okay. But
Yeah.
does it like how does it impact the person like when they're being reviewed for mortgages?
Um, if this is it's going to be sitting there under like public records, you know what I'm saying? So even if you're past that 2 year window and your credit's reestablished, it will like the system will the underwriting system will view it and see it there. Um, but that also goes back to utilizing what you learned through that process. Meaning, what I mean by that is, okay, if you've been through bankruptcy, right,
Right.
you reestablish your credit, the you trying to apply for a mortgage where your debt to income ratio is going to be back in debt to income ratio is going to be over 50% isn't really probably the best, you know, way to get approved for a mortgage because now it's showing that you're trying to over leverage yourself again. You know
Yeah.
what I'm saying?
Right.
So so and if you so what I'm trying to say there is if you have let's say you reestablish a 700 credit score, right? But,
Okay.
but your credit report shows a chapter 7 bankruptcy, okay?
Mhm.
Let's say it's 4 years old, but it's still showing on your credit report. The system isn't going to view your file with a 50% debt to income ratio as it would somebody with that 700 credit score without bankruptcy because it's going to give that person the chance to over leverage themselves versus you that's been through bankruptcy, you might not get that leniency. You see what I'm saying?
Yeah,
So
that's what I wanted you to say, kinda like, let them know that it does
yeah,
impact them. Right. Yeah.
it definitely does impact them absolutely. But I mean, realistically speaking, the way I just broke it down, like that makes sense. Like if it was your money, Keisha, right? It was my money. Like you would view that kind of the same way. It's like
Mhm.
okay, you've reestablished your credit, but what is looking like you're venturing off into some of the old habits that you did that got you in bankruptcy in the first place, right?
Sure,
So,
absolutely.
when you try to, that's what, going back to you in the beginning when you asked about the lenders not, not being as vocal and talking to the clients, like you said, you didn't really talk to your lender and this, that, and the third.
Mhm.
That's a part that I take pride in, where having these conversations with the clients to kind of break it down in more of ABC 1 2 3 type of, where they could fully understand. Because a lot of people just think that, you know, not when they don't have the information, that, oh, they just don't want to give me the loan. I don't understand. I have a 700 credit score. Why can't I get the loan? This, that, and the third. And it's like, when you try to break it down to them in small form, it's like, okay, and they get to talk to you at the professional. You can almost get them, more times than not, you could get them to understand and look at it from a different viewpoint.
Yes, absolutely.
Yeah,
Yes. That's what I wanted. That's why I wanted you to touch on that
yeah,
because, I've had a situation before where somebody was like, well, yeah, that bankruptcy was like 4 years old and but it's still on, it's still under your profile, you know what I mean?
hmm,
Even though you reestablish your credit, it still has an impact on you.
yeah,
It's not the way it was back then, but like you said, it's still like an identifier. Like, okay, here's like a little red flag that this person had, previously had a bankruptcy. Doesn't
right,
mean you can't proceed and get, the house that you want, but just know that it's being looked at as well, just as
yeah,
like foreclosures as well too, right?
right, absolutely. And even with late payments. So let's say,
Mhm.
you know, if someone was an 800 credit score, right,
Mhm.
and they just recently had a 30-day late on their credit card. All right, but they've been it takes some people some time to get up to 800, so they've been decent for a long period of time, right?
Yeah.
With their credit. So let's say that one 30-day late drops them down to like a 700, right? Which is still a decent credit score. But you're applying for a mortgage now, and when we run you through the system, you just recently had a 30-day late. So
Mhm.
now you got to look at it, like I explained to some people, and they be like, I don't understand. I've been on 800 all these years. Now it's this, that, and
Yeah.
the third. They don't understand, but it's like, all right, reverse it. Think about it. You're applying for a mortgage when you just was late. It's looking like,
Mhm.
you know, who would want to, I hate to say it like this, but it's just true. Like, you got to
Yeah.
look at it like, who would want to give somebody a loan that seems to start to be having, that's look like they may start to be having financial problems, right? You've been
Mhm.
800 all these years, been paying your bills on time. You was just late recently, and now you want a mortgage. It's like, yeah, you have a 700 credit score, but that's going to
Right.
impact you. You know what I'm saying?
Absolutely.
Yeah.
Mhm.
So,
I tell people it's like your resume. You know what I mean? Like your credit history is like your resume, basically.
absolutely.
Even if you try to leave it something off, is
Yeah.
ways for them to find out.
Yeah.
They pull your credit, they get in the whole history. And so, just be honest and upfront about what it is. I know in terms of finances, that's like such a hard discussion for most people to have. And
Yeah.
it's such a hard discussion for people to be transparent about because everybody feels a little embarrassed. Just say they did have some late payments in the past, or maybe they did have to file bankruptcy, but I just believe in being transparent and learning from those things, so
Yeah.
my thing is, like I said, I didn't have a real good relationship with my lender. And in retrospect, it's like, dag, I could have asked so many different questions, or, I
Mhm.
probably would have asked more questions. I mean, I took most of my questions directly to my realtor, but, she was a seasoned realtor, but at the end of the day, she still is not the one financing my mortgage. So I should
Mhm.
have really been having more conversations with them opposed to her. So I just like to, like I said, I just like to kind of give people more education behind these things because I also see a lot of myths online, like, I see people creating these videos and a lot of this stuff is like totally incorrect. It's like you're telling people lies. Like that's not a true statement, you know?
And to add to what you're saying, you also asked like, what advice would I give, and that's some great advice too. Is like, as a first time home buyer, especially, you want a good team with a realtor and a lender, right? Like,
Mhm.
what I see sometimes is, and I know this is probably not going to be the popular thing to say, but you have some realtors out there that want to be for whatever reason they want to be the end all be all, right? They want you to just talk to them. They don't want you to talk to the lender as much. They want to be the go to, which is in some instances is fine, but we all got to stay on our own lane, right?
Yes.
So as a first time home buyer, I would advise, like any of my friends or relatives, anybody, that you want a team where the lender's gonna stay in his lane, right,
Mhm.
and do the finances and educate you and talk to you about the financing part, and the
Yeah.
realtor is going to do their part and educate you on the process and being the advocate for getting you to through all the parts that you need to get through, right? But at
Yeah.
the same time, they work together within their own
Yeah.
their lanes, right?
Mhm.
Because when you have one higher than the other, when you have that balance off, it it could bring issues to the buying process,
Absolutely.
and it could cause an unnecessary stress to the um
The
to the
buyer.
buyer as well. Yeah,
Mhm.
I mean,
Mhm. Yeah. Yeah. So, I also like to discuss. When I was realizing that we weren't touching on a lot of the expenses that come with purchasing a house. There are so many programs and opportunities out here. Most people highlight just that, but I want to just talk a little bit about the expenses that the buyers will incur, which is of course your EMD, your earnest money deposit,
hmm
once you're making that offer. Because I think people kind of think, oh, well, I could just make an offer. No, you can't make an offer without that EMD. Like, we need a deposit, a good faith, or what some people refer to as a good faith deposit, to let them know that this is a serious offer. I don't even think at this stage in the game that if they don't have a EMD, that the offer is even looked at or considered. What do you
right.
think? Have you seen any
Um,
offers that
that
come?
don't have an EMD.
Yeah.
Yeah, I didn't even know that was allowed. Like I haven't
Yeah,
seen
that's
offers
what
with
that's what I'm
that.
saying. I don't even think
Yeah.
that's the thing. So I always try to explain to clients, like, this is money that you kind of want to have set aside, like this EMD, because if we see the house that you want, even though you're pre-approved, that's totally different. You still need this out-of-pocket money
hmm
where you have to put down in order to even be considered for the house that you really want. Even though
Yeah.
you're pre-approved for the loan, you still need to pay this money out
Yeah,
of pocket.
and even if you're getting approved for all the grants, where you
Hmm.
technically are going to be coming to the table with, let's say in a perfect world, you're going to be coming to the table with $0,
Yeah.
right? You still going to need an AMD of however much, and what'll happen is you'll get that back at the closing table, right? That's just
Right.
a good faith deposit. So
Yeah.
you definitely need some money, and that's a big part of the educational part, and having, like I said, having a great team
Mhm.
where they I also see this a lot where you have people that, you can have people like us that will, you know, tell them, what they need to hear, not what they want to hear. But
Yep.
sometimes what you want to hear is more comfortable, right? But
Mhm.
more, especially when you buy a house, what you want to hear more times than not ain't going to get you to the closing table,
No,
right?
it's not. Mhm.
So,
No. Yeah. No, really, for real. And it's like I just almost feel like that's what's happening lately. Like that people are going with what they want to hear.
mhm. Yeah, I have it
And it's
happen all the time.
yeah, yeah,
Yeah,
right.
yeah.
But also what would you say are some of the challenges you see with most buyers besides credit?
Some of the challenge, the main challenge I see in today's time right now in this market is um, shopping within your means. Really, I feel like if most people could understand what's the I'm looking for the word that you always say, um, what's a need and what's a want. You know what I
Yes.
mean? When they shop,
Yes.
uh, and kind of like really understand what that is for them, right? And that's where, again, go back to the team and having a great realtor. Where that's where the realtor really is, besides the negotiation, helping them get to that point, right? For the shopping
Mhm.
process, right?
Yes.
Because that's the hardest part. If I was a realtor, I think that would probably be my hardest thing, like kind of coaching them on the realizations of their expectations, right? Because you get people all the time pre-approved, and they the purchase price they want to they need to shop in, they saying they can't find nothing. Well, no, you can find something. It's just
It's just
you have, yeah, your expectations ain't matching, what it really is,
hmm
and that's, you have to be honest with yourself, right? Because and that goes
yes,
back to the conversations we have a lot off camera.
yes.
If you might be in a position that you just need to get a starter home. You know what I mean?
I was
And
just
work,
about to say that.
and
We
work your
always talk
way
about
up.
the starter
Yeah,
home. I want the resurgence of starter homes to return because,
yeah,
I was just saying to somebody I met at an event, like, you pay $2,200 for an apartment, but you won't do that for a starter home. I don't understand.
yeah. Right, right,
If you are viewing the apartment as a temporary spot, you can view that starter home as a temporary
right.
spot as well. The only
Exactly,
difference is you'll have some collateral once you are ready to make
exactly,
the move,
exactly.
and it's like people don't grasp the concept that in that manner, and I don't understand it. Like, this apartment is not your forever home or not, you know what I'm saying? Like,
Right.
you'll pay 22 to $2,500 and it's like, okay,
Yeah,
you know.
absolutely, absolutely.
So
Oh,
it's like the starter home, I think it's too much social media. I think the influence of social media has drastically just changed people's expectations and it's just, I don't know, like it's just made it unrealistic to me.
right. And then it's a lot of that, but then there's also you have the the generation prior to us, was able to, I'm sure I know some of the guys I used to work with, years ago at the oil refinery, where they live in neighborhoods that's selling for 400,000 now, but they bought their
Mm,
house for 95,000 back in the early 2000s. You know what I mean? But you know, so it's like if these people are listening to that person that bought their house 20 years ago,
yep,
that doesn't. They have to understand it doesn't resonate right now. You know what I mean? Like,
it doesn't. Yeah,
yeah,
and that's the thing. That was 20 years ago, even 5 years ago.
right,
Like
right,
you said, since COVID, so much
yeah,
has drastically changed with the market, and everybody's waiting for those rates to come back. And it's like, yeah, don't it's like don't wait on it. Like
yeah.
keep
You gotta
moving.
adapt. You gotta
Yes.
adapt. You definitely gotta adapt. It's like anything else in life, right? You know,
hmm
how many times have you been at? If you've been at your job for 10 years, I'm pretty sure you done seen a regime change. You done had to deal
Yeah.
and adapt with new managers. There's all
Mhm.
types. So you always gonna have to adapt in life. So it's no
Yeah.
different than with the economy. You know what I mean? Like, yes, you may feel like you could afford that house.
hmm
Is that the right decision, right? It does that,
Yeah.
like, all right, you may have to go to that starter home first to get to that point. That might be the right roadmap for you. You know what I mean?
hmm
So you just have to adapt and move accordingly. So
Absolutely.
I think that's the main thing. When you have a lot of people, realistically speaking, that just, and I'm not asking people to lower their expectations. I'm just asking them to be realistic, right? You have
Yeah,
to,
be realistic. Yeah,
yeah,
not lower it, but be realistic because you have to be able to afford this.
right.
So,
And I think also, I'm sorry to cut you off, but I also think what plays a part too is the the auto loan space, right? You
hmm
got to think, before you buy a house, the most expensive loan you probably have before you buy a house is a car.
yeah,
And they don't care about if you can afford that car or not. They don't
nope.
care if you only grossing $2,000 a month, and this car payment is going to be $700, right?
hmm
They're going to put you in that car. It don't work like that with a home and a mortgage, right?
No.
So that plays a big part too, of like just the understanding part of it, right? You
hmm
know what I mean? Because it's like people don't realize how much they could be in their current situation, don't realize how much they really are over leveraged.
Right.
You know what I mean?
hmm
So it's a lot. So that's why I say too. It just comes down to really having a great team around you, with the lender, and your real estate agent, who you trust and you can confide to, and that you feel comfortable listening to, and that's
Yep.
not sending you in the wrong direction, right? That has your best interest at heart. When you find that,
Absolutely.
your shopping experience and you get into a home will be a lot less complicated, and you'll feel good at the end. And then years down the road, when you take that advice, you'll feel like you made the right move. You know what I mean?
Absolutely. And you know what else I wanted you to touch on? All the afterpay, the Klarna payments that people are using, and how does that impact their credit when you guys are reviewing for mortgage?
So that stuff, I will say, it doesn't until you starting to do the long term, like more than like 12-month payments.
Mm-hmm.
It That's when I guess it really like affects you, far as on a mortgage standpoint.
Okay.
Um, if you stay underneath of that, you should be fine. Um, but I would say if you know you're going to buy a house,
Avoid
right?
it.
Yeah, we'll definitely avoid it. You know what I mean? I will avoid any debt spending and while you're in the process of buying a house.
Mm-hmm. Yeah. Yeah, because some people don't see it as that,
Mhm.
like it's like they see it, it's like the afterpay thing, but I don't think they recognize it as a loan being reported to their credit.
Mhm.
You know what I
Yeah.
mean? I think they think only if, okay, they default on it or they stop paying or what have you, then it's going to report. But no, it's still reporting to your credit.
Well, yeah. Well, especially when it's over the 12 months. Sometimes if it's under the 12, a lot of I don't know. I'm actually gonna say a lot of times if it's under the 12 months, if it's not those long nut terms, they
Hmm.
won't report. Where it comes up is when you submit your bank statements, and then
Oh yeah,
the underwriter reviews your bank statements, and they see, all right, we asked for the last 2 months bank statements, and you got afterpay on February 11th, $150. Afterpay March 11th, $150.
yeah.
Anybody with any really, under any underwriter that's good at that job is going to say, okay, they have a installment payment plan here, and they're going to have to ask for it to make sure your debt to income is still where it needs to be for you to qualify. So that's more times than not when it comes to those things. That's where it get caught up in the bank statements,
So they get
not
caught up
reported on credit.
so it gets caught up in their bank statements, but then it increases their DTI, right?
Yeah, it can. Yes, absolutely. If we can't exclude it,
Oh,
it,
okay.
it
So
just depends on how much they're using. So um, guidelines. If you have an installment plan, and that's not just afterpay, that's anything that's under 10 installment plans, 10 payments left on an installment plan.
mhm.
Um, if it's less less than 10 months, right? You get excluded long as the total monthly payment is less than 5% of your gross monthly income. So
Mhm.
that's what the lender has to look to see if they can exclude it. So if you went crazy with afterpay, let's say, yeah, you got 10, 10 things on afterpay, they all under 10 months, but they all like, let's say $100, that's $1,000, right?
Mhm.
If if you gross in, let's say, if you make $84,000 a year, that's $7,000 a month gross. 5% of that is what, about 350.
Mhm.
So we're not gonna be able to exclude all that $1,000. We might be able to exclude, $350 of it,
Yeah.
right? So $650 of it is going to your debt to income ratio. So
Mhm.
it's just like, but to be honest, it's rare that I've seen that far left extravagant people. Like majority of the time, it's been like two or
Under.
three, yeah, where I could exclude it.
Yeah.
Um, so it's never killed a deal in my experience,
Okay.
but it's definitely something to avoid when you're in the process of buying a home.
Okay.
I hope I wasn't long winded there. I just wanted to
No,
get
no. I'm
straight
glad
to
you
it.
broke it down because I thought that it was hitting their credit, but you're saying not always.
Most
So,
times from what I'm saying is not. Yeah, it's only the longer term ones that really hit their credit, from what
okay.
I've seen.
Okay.
Yeah,
Yeah.
yeah.
Okay. Well, that's good to know
It's
though.
usually all from the bank statement shit. Yeah.
Yeah, the bank statement. So,
Yeah.
what about can you elaborate on a job history, right? Because I had a situation, I think we had a situation where we had an individual who had a job and she had a second job, but she had a gap in the employment. Remember?
Say
Do you
again.
kind
Let's.
of
I'm
remember her?
trying, yeah, I'm trying. I'm trying to
She
put
had
together.
she was using two incomes to qualify for the house that she wanted, right?
Uh-huh.
But we found out that she had a gap in the employment. She switched employers for her second job that was
Right.
getting her, up to the income guidelines that she needed to qualify for the mortgage she wanted to obtain. But, she's always worked the second job, but she had some sort of gap that she never let us know. And then when you pull the information,
Yeah.
remember it
Sure.
kind
Sure.
of like,
Yeah. Because
yeah,
what to qualify for both jobs income, you have to have 2 years of consecutive uninterrupted. That's what the guidelines say. Uninterrupted 2 years to include both jobs.
now, is that
So
only for both jobs? Because I hear some people saying if you have like, is that only if you have two jobs? I mean,
that's for two jobs. So
yes.
what you I think which so let me clear it up. Let me see if I'm answering your question. So what you might be referring to is the job gap just in general for your main job, right? So let's say you only
Right.
have one job. The guidelines is if you have more than a 6 month gap, right?
Hmm.
Long as and let's say it's W-2 income, okay? Long as before the 6 month gap you had 2 years consecutive employment, and now the new job after the 6 month, the longer than 6 month gap you've been at for longer than 6 months, we could we could qualify you.
Okay.
Yeah.
But if it's two employers, then no.
If it's two employers, any gap, yeah, it won't be.
It, yeah.
Yeah.
Yeah. See, I didn't think that made sense though.
Well, what you think? As far as what? Which
Because
one?
I'm like, okay, they still have a primary employer. Like, okay, so they had a gap with the second employer, and now you're like, no, that doesn't qualify. You know?
So they still qualify with the first employer with that income.
Yeah, yeah, but they needed that additional income to get to the number they wanted to get to.
Yeah. I mean, I listen. I'm not saying the guidelines are always right.
No,
I'm just
I know. I'm just
saying,
saying. I just thought that was weird. Like, okay, so they can't. It's no interruption for the second employer, but for the first employer, you can have up to a 6 month interruption, and you're good.
yeah, because I feel like that more so with the first employer, they're trying to be lenient, right? Because
Yeah,
um now remember I came in this industry after COVID, so I think a lot of that guideline happened because for the first employer was a result of COVID because so many
yeah,
people got laid off,
right.
so they wanted to be a little lenient there. You know what I mean?
Hmm.
Now, as far as the second job, is probably more is less tolerable because all right, let's just be truthful. Like how many people then if they were more lenient there, how many people would just go get a second job so they could afford more of a house and then quit their second job? You know what I mean? I think that's the way they look at it. I'm not saying I
Yeah,
agree with it. I'm just
probably.
trying to give you a different perspective, right?
No,
But
no, that actually makes a lot of sense because when it happened, I was like, well, I know that they give, some leniency for the primary job. So what's up with the second? Like, it's like, okay, no interruptions. Like,
yeah,
all right. But is that just for FHA or is that also for conventional as well?
I believe it's the same around the board.
Yeah.
Um, I believe I'm pretty sure. Yeah, I
Okay.
have to look because to be honest with y'all, majority I want to say like 75% of my files are FHA, especially in this market because going back
Hmm.
to what we was talking about, people, FHA has the lower interest rate, and then you would go higher on your debt to income ratio. So with the cost of homes, I wouldn't doubt that a lot of lenders, majority of their profile is FHA at this point because just from the higher DTI leniency that it has.
Yep.
Um, so yeah, but I'm
As
pretty
well as the
I'm
lower
pretty
down
sure.
payment too.
Yeah, well, this for first time home buyers is about the same.
Yeah.
I mean, it's 3 to 5% for conventional. You usually could get 3%, um, and 3.5% for FHA. So it's not too far off.
Yeah. But doesn't the credit score have to be higher?
Yeah, it does. It does. It
Yeah. So
does.
that's where I feel like it's like, yeah. Because, we have a lot of people that's kind of like struggling to get to the 620, let alone having the 650 or above.
But so the thing is, too, just compare apples to apples. for to get that higher debt to income ratio that FHA allows, what we was just talking about, your credit
Yes.
score has to be higher as well. So
Yeah.
somebody with a 620 won't be able to, more than likely, won't be able to get that higher debt to income ratio approval on the FHA anyway. So
Hmm.
I'm talking about somebody that's like already a 600, high 600, low 700s
Yep.
that want to shop at a higher price point.
Hmm.
A lot of times going to go FHA over conventional because of that extra debt to income ratio allowance.
Yeah. Okay. Yeah, that makes a lot of sense. Yeah. So, before we wrap up, is there anything you would like to, say to first time buyers or any buyers in the market in general, like any like advice or suggestions or rules of thumb that you might have?
I would say, you know, pretty much everything we covered. One, find spend a lot of time finding a good team. Take some time to find, you know, interview some realtors, interview some lenders, right? Don't just go to the first one you that you spoke to, right? Because that I just value that fit, right? When you have a good team working for you, I've seen it on both sides of the spectrum. So I would say start there. Um, Invest in your 401k. That's a huge one. That's a huge
Okay.
one. Invest in your 401k, because people leave so much money on the table. Um, and
What do you
try and
mean
just try your best to save, huh?
What do you mean by that? You said investing in 401k because people leave money on the table.
I mean, just to save, just because I just feel like it's easier for people to save when they invest in their 401k.
Yeah, definitely.
You know what I mean? It's like, all right, if you if you gradually took your 401k from 3% to 6% and did it a percent a year, right? Um, you'll be surprised how that adds up to the point where, maybe when you're ready to buy a home, you have some funds there that you can pull from.
Yeah.
If that makes sense for your situation, right?
Hmm.
Versus trying to save up, you know, $5,000 to $10,000 or whatever the case may be, right? Um,
Hmm.
I just I think that you'll be surprised how many people don't just do that. Like you won't miss that money. That's pre-tax dollars as
And I
well.
was about to say, and
Yeah,
it's pre-tax,
yeah.
and if
So
you're getting that employer match, like take advantage of that, like,
exactly,
you
exactly.
know.
So
Hmm.
um, yeah, I mean that's that. Those will be then the other one is if you have time. This is a good one. And it goes back to the Klarna thing we was talking about. If you have time, if you are going to buy, let's say, if you know you're probably not going to buy in the next 6 to 12 months, right?
Uh-huh.
Open up an account and make that your real estate account, right? Say that have money going. If you know you can save and you are going to save, have that money going to that account, direct deposit from your check, and don't spend no money out of it. Don't do anything out of it. And then when it's time to buy a house, those are the bank statements you submit, and
Yep.
that avoids the whole Klarna thing we was talking about in a lot of situations because when you submit pays stuff, those bank statements, all it's going to be shown is deposits. That is not going to be
Right.
showing how you spend your money, and it's not going to open a can of worms for the underwriters to ask questions about and this, that, and the third. So that's a jewel that I always tell people: if you have the time, get that separate account because when during everyday life, a lot of people are just submitting bank statements where they paying these bills out of, they doing this, you know what I'm saying? And it's like now
So
you making the underwriter have to ask questions about certain things that they
so
see.
is that not what they want to see though? Like they don't want to see the account where you are paying bills.
So when we ask for bank statements, we pretty much looking for assets that you have the funds for cash to close.
Oh, okay.
Because
So
your credit
that,
is going to tell us you, yeah, your credit is going to tell us that if you pay your bills on time and all that type of stuff, right? So
right.
we really just looking for your cash to close. It just so happens that if that you have your savings right there, right, and when you transferring money back and forth, they got to source the funds and all that type of stuff. So now they asking for these bank statements that have all this going on.
Yes.
And
So
once they
that's
see it, they
important to
can't
know.
unsee it.
that's important to note that that deposit. So get another a checking account, right?
Yeah, definitely checking account, but yeah, because so that way
Get
you
it.
can
So
take
yeah,
the
let's
earnest money
just want to
deposit.
be very specific for anybody who
Yeah,
views this. Get another checking account that you get your pay or a portion of your pay deposited directly into that account. So
hmm
you could just save for your house
exactly. Yep.
and keep that account exclusively for the
Yeah.
house fund.
Don't transfer any funds
Don't
from another
transfer
account
any
to
funds,
yeah,
yeah, from
just
any account.
yeah,
Yeah, because see, that's where it gets messed up, and
yeah.
that's
That's
where I,
where that yeah, that's where it gets messy at. When once you
yeah,
start showing that checking account where you paying all your bills, you know
yep,
what I mean? Like yeah, it's you open it, you pretty much open up a can of worms. Like
yeah.
that's the so we I don't want to be long winded, but going back to other false
No, you're
pretenses, we
fine.
always talk about the false narratives that's out there, like that underwriters um don't want to close loans. That's not true. It's just they quality control. So it's like
Yeah, it's they're doing their job. Yeah.
yeah, you put it on the table. They see it, they gotta ask questions, right? And
Mhm.
because if they underwrite a bad file, you know they could lose their license, right?
Right.
They don't get paid on the amount of loans that they deny. That's not how it goes. Like
Right.
none of us would be in business if that was the case.
Yeah, for real.
You know what I mean?
Yeah. No, but
So
I just wanted to make sure we made that detail about the transferring also.
yeah,
Because that's where I had to disclose another account that I didn't want to disclose. Like
exactly.
I had made a transfer to my other account, and then they were like, "Well, you transferred $800
Mhm.
to this account," and I'm like, "Yeah, but I don't use that account for really,
Right.
anything."
Exactly.
Because I was always taught to diversify my funds, so don't keep all my money in one bank.
Right.
So
Right.
I never just had one bank account. You know.
Yeah.
But the thing of the matter is, like you said, when you transferring in and out of bank accounts, that's
Mhm.
where it gets messy.
Yeah, exactly. Yep. So that's
Because
why I
now
say if you have the time, open an
yeah,
account, check an account, and if you know you can put aside $300 a check or whatever the case may be, just
yeah,
have that direct deposit into that account.
yes,
By the time you buy a house, you look up, you got 10,000 in there.
yep,
You're gonna be given the last two bank statements for that, and it's gonna show your balance and all deposits, direct deposits from your job, because that's what it'd be about. They have to source these transactions. That
yep,
you know what I mean. So you don't have to source that because it says direct deposit, payroll,
mm-hmm,
Amazon. You know what I
yep,
mean?
yep,
And and that's you submit that and you good.
yep. Okay, so one more time for you guys, for the viewers, get a separate checking account that you have a portion of your payroll auto deposited into. Do
Mm-hmm.
not transfer any funds in or out of that account to another account.
Right.
Don't do
Exactly.
it,
Yeah.
because if you do that, then you're going to have to disclose that other account.
Exactly.
Now you can make a withdrawal, but go to the bank and do that.
Right. Exactly. Yeah.
Don't transfer any funds,
Yeah.
because whatever they see, they're going to make you disclose.
Exactly. Yeah.
So, yeah, I wish I had known that. Yeah, because they were all in my business. So you got
Right.
more money in this account? Well, what is this account? I'm like, my gosh, it was a nightmare. But at any rate, thank you so much, Jose, for your time. Every time I talk to you, I learn something new. So I always enjoy speaking with you,
No problem.
and we'll see each other soon.
Absolutely. All right, Nikisha. Have a good one.
All right, you too.